So today's session will be about the characteristics of a winner or a good setup. Now previously we had discussed that whenever we are looking for a good price structure, it should follow certain criteria that it should fulfill, which was that in weekly time frame the price structure should be above the 30 EMA. This will tell us that the price structure has transitioned from stage 4 to stage 1 and ultimately stage 2. After this criteria has been confirmed, the price on daily time frame should be above the 50 EMA and 21 EMA. This will again tell us that the structure was following from stage 4, which was a downtrend, has subsided into a basing phase and ultimately into an uptrend, which is stage 2. So let us quickly revise that what are the characteristics of a winner or a good setup by going deeper into this subject. So one of the main points that every good price structure that it should follow is a clean change of character from the left hand side to the right hand side, meaning that the price structure that it was following here, which is lower highs and lower lows, lower highs and lower lows, which is full of volatility, it should convert into something like this, meaning that after this phase, whenever the price starts to go from LHS to RHS, it should start making higher highs and higher lows. And when the price is making higher highs and higher lows, it should do so with low volatility. Low volatility meaning that the candlesticks should be precise and clean without much volatility, like something like this. Okay, the candlesticks should not be something like this, something again like this, something again like this. The price structure should not be like this, but it should be something like this. Okay, like this. The candlesticks should be like this. Okay, like this. Breakouts, continuation, breakouts, and so on. So whenever we are looking for a setup, the left hand side does not matter much, but when it transitions from LHS to RHS, the transfer of price structure from volatile to clean should be always present, because when we see that type of price structure, the price structure automatically tells us that it will give us multiple opportunities to enter in the near future by making some kind of pattern or some kind of contraction where we may get a low risk entry. So let us look at some of the price structures that we should look out for. Now the first example is Reliance Power. Now we can clearly see that when the price was moving up, it was moving up with upper circuits. Now this was the time when I guess it was locked in a 5% up circuit limit. So this naturally tells us that the liquidity will not be there and buying and selling will happen at random places. Now again, the circuit limit, I guess it got taken out around this area and the price structure started to move in a smoother fashion and a linear fashion. Now like we discussed just now, that this price action does not concern us. What concerns us is that the price structure that is happening in this area. Now look here, after the price was in a downtrend, it made a low around here. When the price started moving up, it made higher low, went up, gap down, but it made a higher low around here, went up again, went down, higher low around here. Now when this was happening, it made a base inside the bigger base right here. Now this is a base inside a bigger base. Now whenever we see a base inside a bigger base, this usually tells us what the price will do when it reaches the pivot point of the bigger base. Now this is the pivot point of the base which had formed inside the bigger base. Now near the pivot point of the base around here, you can see that the price is moving up by making higher highs and higher lows and protecting their lows. Now this is not an ideal contraction structure, but the presence of the buyers is starting to get more stronger and stronger because the lows are getting protected. Even if the selling pressure is acting from the highs, the buying pressure is equally acting from the lows and protecting the price from going down from the highs. Now after this decent contraction, the price gave an expansion candle and ultimately reached the pivot point of the bigger base. Now you can clearly see after an expansion candle, let's say this is a 15% expansion candle, and after this expansion candle the selling pressure acted here and the price went down inside the base, but it made a low around here. Now let's say this is a pullback candle of around, let's say 3%. Now let's say we are not seeing these candles. Now this clearly tells us that after the 15% move, the pullback only happened of 3%. Now this tells us that the buying pressure is more dominant, because if the selling pressure was dominant and the buying pressure was weak from here, then the buyers who bought from here would have naturally sold and the price would have gone down even lows from here, but it did not go and the pullback was of 3%. Now this does not confirm that the price will move from here. We need some additional confirmation, and we are getting the additional confirmation from this candle. The previous candle made a low here, and from that very low the buyers pushed the price higher and closed in the middle of the pullback candle. Again selling pressure acted, but this low was again protected, meaning that the buyers were acting around these levels. Again the price opened with a gap up and closed inside that pullback candle again. Now this tells us that the selling pressure is weak. Firstly, because after the 15% move, if we are getting a contraction or a pullback candle of 3 to 2%, this automatically tells us that the selling pressure is weak. And after this first pullback candle, the lows are being protected and the price is trying to move higher. This indicates that if the price breaks the high of the major pivot point, it will give a expansion phase like we are seeing around here, because you can see some similarities in this expansion candle and this expansion candle, and this contraction phase and this contraction phase. What do I mean by this? This contraction phase was a bit volatile, but the lows were being protected and the price ultimately gave you a good move. Again after a good move, the price again contracted in a very small range, meaning that the selling pressure was getting weaker by the second and the buying pressure was getting stronger by the second, and the lows were being protected. Everything was pointing towards the direction that the price is ready to give you a good expansion candle or a breakout candle. And after the breakout happened, another expansion candle came and the price again contracted in a very small range. The lows are being protected. Look at this selling candle. If the price had to go down, it would have gone down from this area, but it did not, and ultimately the price moved up. The selling pressure tried to push the price down from here, but the lows were again being protected and ultimately the price moved higher from here. So these are some of the small points that we should notice in any kind of price structure that we are trying to enter, because the price or the price structure will give you some hints that in the future it may give you some opportunity, like the hints that we were shown right here. Now let us move on to the next example. Next example is of Lloyd Enterprises. Same thing, we should not be concerned by this price structure on the left hand side. What we should be concerned about is the price structure on the right hand side. Clearly the price structure was getting stronger because the price was making higher lows and higher lows. While making the higher lows, it made a base around here. Same thing like we discussed in Reliance Power. Whenever the price makes a base inside a bigger base, it will naturally give us the indication of what will happen when the price reaches the major pivot point. Let me draw this more clearly right here. Now after this base was formed, again good expansion candle, and look at this pullback candle. Although the candle looks a little bit scary, but look at where it is forming. Good breakout, right? Minimal selling pressure. Now whoever bought from here, or I guess from here, booked something here but did not exit fully, because if the price had to go down from here, it would naturally break the lows and go down, but it did not. But again, what it did was it contracted again with two candles and ultimately gave you a good expansion candle. Now like we discussed in our many lectures previously, that when the historical data shows us that the breakout and the follow through is good in the historical data, then whenever we get a similar kind of contraction in that very price structure or that very stock, then we can be sure that 7 out of 10 times it will give us a good linear up move if all of the conditions and the criteria are being met. Same thing happened here. Good expansion candle, right? The price tried to go up but could not and ultimately went down. It broke the low of the previous candle by this candle and made another lower low. Now this tells us that the selling pressure is there, but if the price had to go down, then naturally it would start to break the lows and do something like this or do something like this, and in the future may go up or go down or sideways. But what it did was it protected the low, closed inside it, made a inside bar candle and gave you a breakout, because we were seeing the same kind of structure here and we saw the same thing here, same thing here, same thing here, and so on and so forth. So whenever the historical data shows us that the breakout and the follow through is successful, then in the future it may do the same if all of the criteria are being met by the price structure. Now let us move on to the next example. Next example is ITD-SEM. Same thing, we will not be very concerned about this price structure, but when we start to notice that the shift is happening in that very price structure and the price structure is shifting from volatile to a clean one, then our focus should be when the price starts to make contraction structures like this. Now this is a very hard entry to anticipate or to enter, because if we are not seeing this, then it is very hard, because we are clearly seeing that the price structure is very volatile and it may go down from here after giving a breakout. But after the breakout, the price started to move with gaps, right? See, previously there were gaps too, meaning that the price structure was getting the momentum from the buyers, and the buying pressure was getting stronger and stronger. Now let's say this was a 50% move. Like we discussed, that after a certain kind of move, the price will face selling pressure, which is normal, and what it does next will determine what the future of the price structure will be. Now let's say that every up move is of 50%. After 50% up move, it went down. This went down 40%. This went down 30%. This went down 15%. Now this is price structure 1, this is 2, this is 3. Now can anyone tell me that what are the probabilities that which of these price structures will move the fastest if it gives a breakout? Which one? I want everyone to answer that which of these price structures will move the fastest. Yes, third one, because we are clearly saying that the supply pressure is high here, moderate here, and very weak here. So if the price starts to give a breakout structure, then number 3 has the highest probability that it will give us the price structure and the linear move that we are expecting from any kind of breakout setup or any kind of contraction structure. Same thing is happening here. After 50% up move, it may be contracted 7%. Now here are some of the minute details that we should notice whenever we are analyzing any kind of contraction structure. The first pullback candle made a low, and look at the price candles that happened after the first pullback candle. This first candle showed us that the buying pressure was strong and it formed a shakeout type candle, right? But again, this pullback candle and after this the bounce back candle got quickly deteriorated by this selling candle again, right? Selling pressure was again active around here, but again you see the long tails of these candles which tell us that the buying pressure was more dominant. And again, like we saw on R power, that if the buying pressure is dominant and the candlestick is showing the signs of good buying pressure by these shakeout or demand candles, and ultimately if the price crosses the high of the major pivot right here, if it crosses the high, it will most of the time give you a good linear move that you are expecting from any kind of breakout setup. Now let us move on. Again, same thing on CDSL. We will not be too much concerned about this price structure. Rather, we will be concerned when the price starts to shift from LHS to RHS by making high highs and higher lows. We are also seeing that selling candles were more dominant here, but when the shift happened, the buying candles got more dominant. I hope you are all seeing this, that during the downward phase this selling pressure was more dominant, but when it starts to shift from the downward phase to the upward phase, the candlesticks should clearly change from these types to these types, and this tells us that the shift is happening and the buyers are getting more dominant and they are accumulating at each dip or at each lower levels, and this is clearly present from these higher lows. Again, the price made a base inside the base, but the distance was not very much, but let's say this is another base inside a bigger base, lower high, higher lows, right? Higher lows, good contraction here, and gave you a breakout. and after the breakout it gave you an expansion candle and made a high. Now this is not a very good contraction structure because the candlesticks are not very clean and they are full of volatility where neither the sellers are dominant and neither the buyers are dominant because they are all forming doji candles. But one thing is very clear here is that the lows are being protected, meaning that the buyers are slowly but surely accumulating the price at each dip. Even if the selling pressure is acting from the top, the buying pressure is equally responding in their own way, and slowly but steadily they are getting the upper hand. Now you also can see here that after a certain time it started contracting in a very small range. Now in this type of price structures where the margin of risk is very low, let's say this is a 2% contraction candle, right? Oh sorry, not a 2% contraction candle, rather a 2% contraction structure. Now whenever we see this kind of low risk contraction structure after the shift has happened from the downward phase to the upward phase and the price is showing that the signs of bullishness is increasing at each up move, then you can look for an opportunity around these areas because the margin of risk is very low. Let's say you do not want to even risk this 2%. It gave a breakout. Now you know breakout happens, gives a follow through, breakout is happening, which is ultimately a follow through of this contraction structure right here. This is a very narrow contraction range. This is again I guess 2%. Now the criterias that we want have been fulfilled and you can look for an opportunity in this type of contraction structures. Now if the price or the price structure has not fulfilled our criterias, then no matter what kind of contraction that we see in the price structures that have not fulfilled our criteria, then automatically they will get deleted from our watch list, because if our criteria are not being fulfilled, then the chances of the setup failing will significantly increase. So let us move on. Another example is AU Small Finance Bank. Now this is a major pivot. Now again this is another base, right? This does not concern us. This concerns us. Higher highs here, higher lows here, base inside a bigger base, breakout, decent contraction, again an up move. Now this phase tells us that the breakouts and the follow throughs are working, and if the price structure provides us with an opportunity or a setup in this very price structure in the future, then we can look for an entry. Again the price went up, made a low here, made higher low, higher low. This is also known as a VCP price structure right here. The volatility is getting smaller and smaller, which ultimately tells us that the selling pressure is getting weaker and the buying pressure is slowly gaining the upper hand. Now after the breakout happened, a small expansion and the price contracted. Now when this contraction was happening, you can see that the price took support from the breakout levels. Now this tells us that the buyers that were active here are also active here, because if the buying pressure was weak, then it would have normally went inside the structure, but it took support from the very breakout level it broke out of in the previous candle. Now again let's say you missed this one also. Now again it is contracting above the breakout level. You also saw good up move, right? Again bigger base, good up move, contraction, good up move. Now the breakouts and the follow throughs are working. Now here the risk is very small. you are seeing some shakeout type of similarities, meaning that the buyers are getting more dominant here and it is forming some shakeout candlesticks, meaning that the buyers are getting activated from the lows. And if you see any low risk opportunity in these type of structures, then you can go for it, because the margin of this is first very small, the historical data is up to your mark, and the previous all of the criteria are being met, then you can look for an opportunity here and take a small risk. Same thing is happening above the breakout level. It is again forming a contraction structure. Now if the market is right and it is not very volatile and it is moving in a linear fashion and there is not any kind of news that can shake the market, then we can look for some opportunities in these type of contraction structures this week. So let us move on. Now let us see some of the price structures that we should avoid in any kind of market, be it a bull phase, sideways phase, or a bear phase. Now I guess this does not need any kind of explanation, because we have discussed about this multiple times in our previous lectures. Whenever we see this kind of volatile price structures where the highs and lows or the supply and demand zones are not being respected and the price structure gives multiple fake outs like this, and even after an up move the contraction is happening, but rather than giving us this type of candles where there is demand from the lows, it is giving us candles where the supply pressure is coming from the top. Now if the price had to go up, it will naturally contract and expand, but what it is doing here is selling pressure from the top and the buyers are not present here, and ultimately it went down. Now whenever a price transitions from this kind of phase to this kind of phase, from lower highs, lower lows, lower highs, lower lows to higher highs and higher lows, it should not break that structure like this, right? This is an up move, naturally a downward phase occurs, and this phase is where we are interested in. But after the breakout, it breaks down like this, then the structural integrity gets deteriorated, and if the price again sets up here, now there is a risk that this selling pressure will get activated from here and it may result in a fake out like this or something like this. Now you can see that the bullish structure that was happening here got completely nullified by this. Again, look at this and look at this. There is no linear price action, and even if the price forms a structure, a very good contraction structure, we should not enter in this type of setups, because the chances of getting stopped out or getting trapped in a fake breakout increases. The probability gets much higher in this type of price structures. Now let us move on to the next example. Another example is Adani Power. Now this does not concern us again, but look at here, good buying candle. Again all of the buying pressure gets nullified. Good buying candle again here, all of the buying pressure gets nullified. Good buying pressure, majority of the buying pressure gets nullified. And look at the volatility. The transition has not happened in all of this phase. The volatility has stayed from here all of the way to here. The volatility is still there, meaning that even if the price gives a breakout like it did here, it will majorly, in most of the setups when this kind of volatility is present, it will result in a fake breakout or a trap setup. Here, majority of the people who were tracking this Adani Power would have entered around here and ultimately get stopped out in this candle or this candle. So whenever you see this kind of price structure where the transition hasn't happened from LHS to RHS, then no matter what kind of contraction happens here, we should not enter. What we should do is, I guess you all know that it needs to contract, or let's say it does not contract, right? It should give a good breakout and a good close above the breakout level. Let's say this is a breakout candle and another expansion candle. It should contract here. Then we can look for an opportunity, because the transition would have happened from this phase to this phase, and the probability of our setups working would increase significantly. So let us move on to the next example. Next example is Psi Life. Again, from the very start, Psi Life showed us volatility, right? Volatility, 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 volatility. Again, all of this is volatility. Now let's say we do not know this structure, right? This has not happened yet. Let's say, let me delete this. Okay, let's say this was the breakout candle. We should not enter, because we know that this volatile area will provide a very major hindrance if the price is trying to go up, and we can clearly see that it did exactly that, and the price faced a rejection from here and ultimately went down and gapped below, but ultimately it pushed above the volatile region. But again, we know that the price has to close above it, give you a good follow through, good contraction, and then only we will look for a setup or an entry. Now majority of the people who were tracking this Psi Life would have entered around here, and they ultimately got stopped out. Again, they would have entered this in this candle in FOMO, because it gapped up, it tried to move above the resistance point or the supply point or the major pivot point. It tried to go above. Many would have entered around here, again get stopped out again and again. Look, good contraction, but ultimately a fake breakout. Now my point here is that whenever we are witnessing this type of volatility, we should not enter on the very first breakout candle, even if it closes very strongly, or even if it gives a 10% candle. We should rather wait for the follow through, contraction, and then look for an opportunity. Now let us move on. Now the next point is clean candlestick structure. Now this is a diagram that I drew so that we know what kind of candlestick structure that we should look out for. Now this is a very basic diagram that I drew. So whenever, now take this as the RHS of any particular setup or a price structure. Whenever we are witnessing the right hand side or analyzing the right hand side, the lows should always be protected. Even if the price, let's say it is moving up, right, it is protecting the lows, moves up, it does something like this, it breaks the low, but it should immediately bounce back up and go upwards. This tells us that even if the selling pressure was high, the buying pressure was equally high, and the buying pressure got dominant and ultimately pushed the price higher. It should not do something like this, should not go down and do something like this, right? Whenever we analyze these kind of setups, the resistance point multiplies by many times, but when we are witnessing this type of price structure, there is only one resistance point, and if the price crosses that particular point, then the overhead supply is very minimum here, and we can expect a very good up move. But even if it gives a breakout here, in this very price structure, the overhead supply regions are very high and it is present at each higher level. So the chances of this setup working is very high. The chances of this setup working is also high, but the chances of getting stopped out is equally high. And the linearity will be volatile here, and the linearity will be a swift one right here. Same thing, right? The lows should be protected, like I was discussing just now. Even if the price faces a selling pressure, the buying pressure should equally be present there to push the price higher. If we are seeing this type of candlestick structure on the right hand side of any particular setup, then we can be sure that in the future, if it gives us a particular setup or a contraction structure, the probability of it working will go significantly higher. The RHS should be filled with solid green candles with strong volumes right here, and during the pullback phase, the candles should be weak, meaning that the pullback range should be small. If the price is going up 10%, it should go down 2% to 3% or 4%, and with weak volumes, meaning that the selling pressure is declining. Now, some key points to note in a good prior uptrend in the RHS side. Strong candles should be there with good volumes. Weak candles during the pullback phase with weak volumes, and higher highs and higher low formation. This tells us that the institutional accumulation was going on as price was increasing, meaning that at each low the buyers were accumulating to push the price higher. Now, whenever this type of price action happens, we should analyze it in more details to look for potential setups or to keep it in our watch list. So let us move on. Now, this is an example of a weak candlestick structure that we should avoid in any kind of market. Like we discussed previously, this is the exact opposite, where the price structure is filled with volatility. The price will go up by making higher highs and higher lows, but it will not respect the supply and demand zone levels, and the price structure will be filled with volatility. Selling pressure is happening at random areas, the buying pressure is happening at random areas, and there is no linearity in the price structure. Whenever this type of price structure happens in any kind of structure or price structure that we are analyzing, then we should automatically delete it from our watch list until the price structure gets more linear and more clean, which fulfills our criteria. Now, during now in a weak candlestick structure, there will be weak green candles paired with weak volumes. There will be strong red candles paired with strong volumes. Same thing here. Key points: weak candles, meaning the green ones, will be there and with low volumes. There will be strong red candles right here with strong volumes. Choppy high highs and high low formation. The price will go up, but it will go up by taking multiple stops of the traders that are trading these type of price structures where there is no linearity in the price movement, no good contraction structure in the price movement. This tells us that the volatility is on the higher side and there is no sign of a linear trend. Now this is the comparison, and you can look into it when you are revisiting this particular lecture. Now these are some of the examples of clean candlestick structures. Now our first example is goldium. Same thing. This does not concern us. This concerns us. Look at the candlestick structures, right? The lows are being protected, good contraction, good up move. Again, if the price had to go down, it would have closed down from here. But what it did, it made a demand tail or a shakeout candle here, gave a breakout, and look at the up move. Again, like we have discussed multiple times here, if the price has to go down, it will close below the lows, but ultimately what it is doing is respecting the lows and closing above it. Whenever the price starts doing something like this in any kind of contraction phase, then there is a higher chance that the price will give a good breakout and give a good follow through, and so on. Our next example is Electra green track. Same thing. This does not concern us. Again, after the price shifted from LHS to RHS, look at the lows being protected and the highs being broken out. Now this is a point of concern, but the lows are being protected here, 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 and here, and ultimately gave a breakout. Now this tells us that the supply pressure was there, but ultimately it got taken out by the buyers. Same thing here. After a good breakout candle and a good expansion candle, the price tried to go up, but ultimately closed inside the basing structure. After this candle, this was a pullback candle, but the buying pressure was active here, and it pushed the price high and closed inside this pullback candle. Now this low is our main point of focus, because if the price has to go down, it will close below this low and go down, but ultimately it did not. It showed signs of buying pressure getting more dominant, and ultimately it gave you a breakout, good follow through. Again here the selling pressure got more volatile here. It broke the lows. Majority of the people who bought here would have exited around here. Those who were swing traders would have exited around these areas, but again it moved high, moved up. Now this is another point of focus. This selling pressure is huge, but the lows are being protected and the price is moving up. Right here, this very candle, again the price moved up. It tried to go above the selling zone, but ultimately closed inside it. Again it tried to move above, closed inside it. Now this tells us that the selling pressure is more dominant around these areas, but look at this candle. It closed above it, gave you a good follow through, good contraction. Now this would be our point of entry if we were looking for a contraction structure, but this kind of price structure may work after the price has lifted from the basing structure. It will most of the time will not work when it is happening in this area, because there is no historical data or the buying pressure needed to push the price higher after this kind of selling pressure. The buying pressure was clearly visible in this move. That is why this follow through was successful. But if the price made a contraction structure like this one around these levels, then ultimately this would have failed, because those who may have bought from here would have exited in this structure around these levels, meaning that the buying pressure that was getting stronger would have gotten weaker after a small up move, and the structural integrity would have deteriorated, and ultimately the price would have gone sideways into a consolidation phase or downward phase, or ultimately contracted here and went up. I hope this point was clear. Was it clear to everyone? Okay, yes. So let us move on to the next example. And another example is Shankara. Same thing. We are not interested in these LHS side of the price structure. We are interested in this one where the price is showing signs of bullishness. Same thing here. Good up move. Look at this. After a good up move, whenever it reached these levels, it went down massively. Same thing here again, went down massively, right? But what it did here was did not went down at all, meaning there was a clean shift from a volatile projection to a rather linear one. So ultimately what it did was it contracted in a very narrow range, gave a breakout, good follow through. Now let's say we were waiting for some kind of confirmation that this price structure of volatility has changed to a linear one. So we were waiting for a good breakout. Even if the breakout was not clean, it gave a good follow through, and after the good follow through, it contracted by following our criteria where the highs and lows were intact, and after that it gave a clean breakout, and after that a clean linear move. Let us move on, and here we will see examples of weak candlestick structures, the structures that we should avoid. Same thing like we discussed previously, Adani Power, we should avoid these kind of price structures where the volatility is present throughout the downward phase and the sideways phase, until and unless it transitions from a volatile to a clean and linear up move or a clean price structure. We should avoid these type of price structures. Again same thing, Psi Life, volatile candlestick structure, and we should avoid until it gives a good breakout, good follow through, and ultimately a contraction structure, and from there we can look for any potential entry. Now let us discuss about the pivot points. Now first of all, what is a pivot point? A pivot point is a specific price level from where a directional move is expected. It often coincides with previous resistance or supply zones or within tight range areas. Now this point is very similar to our LHS and RHS, right? How? Because whenever the price moves up significantly, it will face a climax point and the selling pressure will increase and people will start booking their positions. But after this has happened, right, after the profit booking phase and the sideways phase has happened, whenever it starts to move up, it should make a clean higher high and higher low throughout this whole phase. What this means is that we won't be getting multiple selling pressure zones. Let me make it more clear. We won't be getting multiple selling pressure zones when we are looking for any potential setups right here. Now even if the transition has happened, now if we are looking for a breakout setup here, but on the LHS side we are seeing multiple selling zones. Now sometimes this may work and it may give a linear move, but most of the time when the selling pressure zones are multiple at each higher level, then most of the time it will give us some resistance and the price may face some volatility, or it may give some fake breakout or a sideways phase or something like that. Ultimately it may not work in our favor. But if the transition is smooth and the price is making good highs, equal highs, and after the transition it is making equal highs, higher lows, and moving in that direction following that same kind of price structure, meaning ultimately that if the move is clean and linear throughout the way, where there are no multiple pivot points, multiple higher highs, where the selling zones may increase if there are multiple higher highs. But if the high is constant, then we can be sure that if we enter in this breakout zone, then the overhead supply zone is very minimal and the chances of our setup working is very high. But if there are multiple higher highs like this, right, multiple higher highs like this, right, multiple higher highs like this, now the transition is happening, right, and if we are looking to enter here, now we know that this is one resistance point, this is another, this is another, this is another, and this is another. So the move may not be linear, or it may give a fake breakout and take our stop loss, or it may move up but in a volatile fashion. So if the pivot points are clean and linear with equal highs, then the chances of our setup working gets significantly higher. Now, to identify a strong pivot point, we should look out for good price contraction near the pivot level, which is this one. A narrow contraction, same thing. And a narrow contraction meaning that after a good up move, the contraction should be narrow, which means that the buying pressure is more dominant here rather than the selling pressure. Low volume footprints during the contraction or the consolidation phase, meaning that the supply pressure is getting lower and lower when a good contraction happens with lower volumes, meaning that the supply is getting absorbed and the buyers are silently accumulating in this very range. So this is an example of how a clean pivot point should look like. A clean pivot point should have clean resistance or supply points, meaning that there should not be volatile highs like this present in any type of structure that we are analyzing or are about to analyze or keep them in our watch list. The pivot points should be clean and precise without much volatility, and this is how a clean pivot point should look like, where the highs are even and after the change of character has happened from LHS to RHS, the price should start to form higher lows and higher highs when it starts moving up, because when a price starts making higher highs and higher lows, it tells us that the demand pressure is increasing in that said stock or in that said price action. When the demand pressure increases, the volatility goes down and the price starts to make contraction ranges, which we like to see in our setups that we track in the current markets. So a narrow contraction range after a brief move tells us that the buying pressure is still intact, which was happening from here, 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 and it is still intact here, because a narrow contraction range means that the selling pressure is weakening at each higher lows, and that tells us that the price structure has, or the stock has, fewer sellers remaining to drive the price lower. That is the basic need of any price structure to go up, where the sellers are weakening at each higher low that the price is making, and the demand pressure should increase whenever this price starts moving up. This is a clean example of how a demand pressure increases at each higher high and at each higher low, and this is an example where there is no dominance between the buyers or the sellers. Okay, and we would avoid this kind of setup in any kind of market, and this is another kind of setup that we would like to ignore. Where the price is moving up but the buying pressure is not so much to drive the price higher, meaning that the supply pressure increases after the price makes each high, meaning that the buying pressure is not sustaining at higher levels. So this is the kind of price structure that we would like to see in any kind of setup that we are or we would track in any kind of market. So let us move on, and this is the kind of pivot point structure that we would like to avoid in any kind of market, where the highs are uneven, the price is not respecting their supportive levels, which is the supply zones and the demand zones, because when the price starts making uneven higher highs and uneven higher lows, it shows us that there is imbalance in supply and demand pressure, meaning that neither the supply pressure is more dominant, neither the buying pressure or the demand pressure is more dominant. Whenever we see this kind of price structure in any kind of setup, then that usually means that there will be volatility present even if the price goes up significantly from here. When we see imbalance in supply and demand pressure, we would normally see volatile contraction ranges, and that means that there is no linearity in the price structure, which tells us that the buyers and sellers are aggressively reacting at that level, meaning this level, this level, this level, this level, meaning that there is no linearity and there is no significant pressure from either the supply side or either the demand side, meaning that the price will react in a volatile way at each level, here, here and here, which automatically tells us that neither side is in full control. Whenever we see this kind of volatile projection or volatile contraction ranges, we can assume that even if the price goes up, it will show us volatile ranges, and the chances of our stops getting hit in these kind of price structures is significantly high, which ultimately leads us to fake outs or traps. So this is a clean example of a pivot point. Example number 1 is R power. You can see this was the major pivot point, the price went down, pivot point, right, pivot point clean. You can see the price is respecting that set pivot point. You can see the price is not reacting in a volatile manner in this area, rather it is consolidating and contracting inside that pivot point or inside that range, and whenever the price starts to go above the set pivot point, it is going in a linear fashion and there is no volatility, which means that the buying pressure that was accumulating silently from here, they pushed the price higher and closed above, meaning that the supply pressure is getting weaker here and the buying pressure is getting more dominant here. Same thing here, when the price reached the upper level of the major pivot point, it did not react in a volatile manner, rather it consolidated and contracted in a linear fashion, and we discussed about this in the previous examples of that this same Reliance Power. We discussed what made this contraction rather nice, because the lows are being protected and we can see the demand pressure increasing even if the selling pressure was getting activated from here, but the buyers quickly accumulated from the lower levels and pushed the price higher. Same thing is happening here. Clean pivot point, clean breakthrough, and clean follow up. Next example is AU small bank. The same example, see, clean pivot point, clean pivot point, clean pivot point. The price is contracting inside that range of that pivot point. Same thing here, contracting inside that, and whenever it starts to give a breakthrough, it does not react in a volatile manner, rather it gives a clean breakthrough, good contraction, clean breakthrough, clean breakthrough, clean breakthrough, and another clean breakthrough. So whenever the price reaches a particular important pivot point, which is this one, the contraction should always be clean, right? Should always be clean, where it should not act in a volatile manner like this. It gives a breakout like this but closes inside it like this, okay, like this. It should not react like this whenever it reaches a particular major pivot point. Now there are some exceptions where the price, although it reacts in a volatile manner like this, but ultimately what it does is protects the lows right here. Again it will react in a volatile manner. This is your major pivot point here. It will react but the lows will be protected, right? Again it will do something like this but the lows will be protected. Until and unless this low gets broken, the structure will remain intact. But if the price reacts in a volatile way for many sessions, then that ultimately deteriorates the structure of the contraction structure. So even if it reacts in a volatile manner near the pivot point, it should give a breakout after a certain amount of time. Let's say here it reacted in a volatile manner but the lows were being protected and a breakout, right? A decent volatile contraction here, a little bit of volatility but decent breakout, right? Little bit of volatility, decent breakout. No volatility here, and we will see in the coming sessions that will this setup work or not. Let us move on. Now these are the examples of volatile pivot points which we should ignore. We also discussed about this structure when we see this kind of fake breakouts, and this kind of price structures, fake breakouts here. So these are all pivot points, right? Because the price started to go down from this area, so this is your first pivot point, right? The price consolidated here, this is your another pivot point. The price was trying to give a breakout of this pivot point here but ultimately failed. It succeeded here but after a certain amount of move, the selling pressure was more dominant here and the price fell down, and again it started to make a base around here. This is your another pivot point, failure, right? The price tried to close near the pivot point but ultimately fell down again. So this was your another pivot point right here, and this is the continuation pivot point here, another fake out. See, lots of volatility. So whenever you see this kind of volatile price action near any kind of major pivot point, then that is your first indication to leave that stock until it becomes linear and gives us the criteria that we need. Our next example is Sai Life. We discussed about this. See, fake breakouts, fake breakouts, fake breakouts, fake breakouts, fake breakouts, multiple fake breakouts, and fake breakouts. Whenever we see this kind of price structure near a major pivot point, then that is our first sign to ignore this setup. Now we will discuss about good contraction phases and expansion phases, which is the breakout phase. We have discussed about this multiple times in our previous lectures, that a good contraction phase is a healthy sign of a price structure that Whenever we see this kind of contraction after a good up move, then that tells us that the sellers are weakening and there are few sellers remaining to drive the price lower. So even if a little buying force gets activated from the lower levels, then it will ultimately result in a good up move from that contraction phase. Now here are some examples of how a good contraction phase and an expansion phase looks like. Let's say this is a good breakout candle of 15% and this is your contraction phase, right? Now can anyone tell me what does this contraction phase tell us? Does anyone wants to answer? Okay, sir wants to answer, so you can unmute yourself, sir. Yes, this clearly tells us that the supply was getting absorbed at each lower levels at each dip, meaning that the strong hands were accumulating the price at each dip. Whenever we see this kind of contraction happening where the high is getting respected but the low is getting tighter and tighter, whenever we see this kind of contraction structure, then this kind of structure becomes our first priority to enter, because we are clearly saying that even after such a big demand candle, the demand is not slowing down, rather it is increasing after each set candle, where the lows are being protected and the range is getting tighter and tighter, which tells us that the demand is increasing. And if the demand pressure even if it gets the upper hand even with the slightest margin from the sellers, it will result in a good breakout and possibly a good follow through. Sorry. Now who wants to answer this one? What does this contraction structure tell us? Who wants to answer? Does anyone wants to answer? Let somebody else answer this one, this query. Okay, let me pinpoint this more. Okay, sir. So let me unmute you again. Oh, you are already unmuted. So, sir, you can go ahead and answer this question. What does this contraction structure tell us? Yes. Yes. What does this candle tell us? This one. Yes. So this contraction structure tells us that even if the supply pressure got increased in this candle, it got quickly absorbed by the strong hands and ultimately it resulted in a strong up move. And this contraction structure tells us that after a good up move, it gave a expansion candle right here and the highs are being protected. Even if the candlestick structure is not good, but you can see clearly that the highs are being respected by the price and the low is being protected, which tells us that the supply, although the supply pressure is there, the buying pressure is also there, where the strong hands are quickly accumulating the price even if the sellers are trying to pull the price down. So when we see this kind of shakeout candle or demand candles, even after such a big up move, a good expansion candle where there is little volatility, although the price structure is not clean here, but you can see that there are signs that the strong hands are accumulating at each dip. So whenever we see this kind of price structures, right here, right here, right here, we can be sure that there is a strong buying pressure present in this said structures, which ultimately tells us that the selling pressure is getting weakened, and ultimately it gives us a strong breakout followed by a linear move. So whenever we are looking for a setup, we should look out for these kind of contraction phases. So let us look at some examples. So this is an example of Cochin Shipyard, where we can see that when the price was in a base formation, the price is uniformly contracting in a very small range. Like we just discussed, that even if the contraction structure is not clean, it is respecting the high of the pivot point and the lows are being protected. Even if the candlestick structure is not clean, it should respect its respective levels, which is this one and this one. And you can clearly see after that the price gave a clean move, and again you can see here it made a high here. This is a pivot point, the lows are being respected. See, the range is getting smaller, and ultimately a breakout. Same thing, good up move, good expansion candle, high made, although it went down. Same thing, this LHS will not be a concern if the price goes down significantly, but what is our concern is the RHS side, which is this one. See, even after such a big pullback, the price quickly went up, and look at the contraction structure. The lows are being respected, the contraction range is getting smaller, and ultimately a good breakout and a good follow through. Another example is Subros, which we caught in our morning session. Same thing here, clean pivot point, right? Clean pivot point, clean pivot point, right? Good breakout candle, good change of character from the LHS to the RHS, which is clearly visible here. When the LHS side was developing, you can see that the volumes were dead, no volume activity whatsoever. But when the price started to move to the RHS side, you can see that the volumes were present, meaning that the strong hands were present in this up move. After this up move, you can see a good breakout candle came, a pullback came, it took support from the 10 EMA. After it took support from the 10 EMA, it bounced back, again pull back, again a breakout. Now this was not a very good contraction structure for our liking, but this proves that the breakout and the follow through is working in this structure. Same thing, after a decent breakout candle, it contracted where the lows were being protected, and after that same thing, gave a good breakout candle, contraction, and ultimately another breakout candle. You can see that there are similarities in any kind of good setup: contraction, expansion, contraction, expansion, contraction, and expansion. Whenever you are looking for any setup, these are the traits that you should look out for. Another example is Camlin Fines. Clean pivot point, right? Clean pivot point, decent contraction, good breakout, good follow through, good expansion candle also. See that like we discussed, even if the candlestick structure is volatile near the pivot point, it should not break its high and low. What do I mean by this? Let's say this is your breakout candle, right? This is your expansion candle. This is your pivot point. The price is contracting, let's say for 2 days. On the third day, it gives you a breakout. It closes above it like this. Again, another day it closes like this, and another day it closes like this. It should not do like this. There will be exceptions where this kind of setups will work, but majority of the time it should not do like this. Rather, it should follow this kind of price structure, where even if the price is giving a false breakout, it should respect the high and the low of the contraction structure. Same thing, after the price contracted, it gave you a breakout. See, breakout, follow through, breakout, follow through, right? Again, it contracted here. Look at the highs, clean, right? Low got broken, it made another low, and after that the lows were protected. And look at this, the volatility in this candle and the volatility in this candle, night and day difference, which means that at each low the buyers were silently accumulating the price, and ultimately it resulted in a good breakout, shakeout candle and a good follow through. I hope up to this point everything is clear to everyone. Is it clear? Okay, so let us move on. Now, on the contrary, these are the kind of contraction structures that we should avoid in any kind of market. Now, this is your another 15% candle, right? Breakout candle. And this is the kind of contraction that we do not want in our setups, where there is no clean price action after the breakout candle. There is a lot of volatility present, where the highs are not being respected and the lows are not being respected. Even if the price is moving up, it is not doing so by respecting their levels. And when we see this kind of contraction structures in any kind of setup, then there are high chances that even if it gives you a good breakout, it will result in a fake breakout or a trap setup. Same thing here, it went up 15% but ultimately came down 8%, meaning that half of the buying pressure that was generated from this area got fizzled out in this area. Now you can see here that this is a good example that when you see this kind of candle after a good pullback, you should wait for a clean breakout and a follow through and wait for a contraction structure here. Now this kind of contraction structure we should avoid when the price is just starting to change its character from LHS to RHS, right? When the price is changing its character from LHS to RHS, and when it is in its first base formation and it is forming a contraction structure or a basing structure like this, you should avoid it. But let's say this is the contraction structure, but the move has started from here, right? But the move has started from here. There are clean moves, right? Clean moves. Then we can look for an opportunity above this high. But if this contraction structure is forming around here, then we should avoid it, even if it gives you a good entry point with a low risk entry. Same thing here, same concept will be applied to this one. It went up 15%. It gave you a narrow contraction range, gave you a breakout. You entered here, right? And ultimately our first SL got taken out in this candle. Now it again started to make a contraction range, but the highs were not being respected because it was going up, opening with a gap down, going up, closing below. When we see that after a good breakout, the buying pressure starts to weaken after a significant up move like this one. It starts to weaken, meaning that the continuation buying pressure is not available, and this ultimately results in a volatile price structure. Same thing was going on here, same thing is happening here. Whenever the demand pressure is linear, you will always see the price respecting the lows and the highs, and ultimately it will give you a breakout. What does this price structure tell us? That the initial buying pressure was strong, but the price, as it moved up, the buying pressure got weakened and it could not provide the continuation buying pressure that was needed for the price to go up, which ultimately tells us that the selling pressure was getting stronger and stronger, meaning that those who are buying here were selling here, those who are buying here were selling here, or they were giving you a fake breakout and ultimately trapping you in that said breakout setup, which ultimately results in a weak follow through and volatile price action. Same thing is happening here, and in this contraction structure, same thing, initial buying pressure was strong, but the continuation buying pressure was not there, which is visible through these volatile candles and volatile contraction structure, which tells us that the selling pressure was building up and there was a weakening buying pressure, which is the continuation buying pressure from here to here, right, which ultimately results in a weak follow through and volatile up move like this one. Volatile up move, even if the price is going up, it is doing so with a very volatile price structure where the chances of our stop loss getting hit gets higher and higher, because if we start to attempt this breakout, it will take our SL. We attempted this breakout, it took our SL. So what should we do when we see this kind of contraction structure? If the price has started moving from here, right, we should wait for it to make a good contraction structure where it is respecting the upper levels and the lower levels, and after that if it gives you a low risk entry and a good breakout, then only we should look to enter from this area. Now let us look at some volatile projection examples here. Same thing, right? This is a clean pivot point. We can see that the LHS and the RHS is up to our likings, but we can clearly see that after it made a pivot point, around here, we can see multiple fake breakouts, and closing inside the contraction structure. See, multiple negative candles. When we see this kind of price structure, we should always wait for it to transition like we saw here. It should transition from a volatile to a clean contraction structure, give you a breakout above this high, contraction, and then and only then we should look for an entry around this area, because this will tell you that all the supply pressure that was present here got taken out and the demand pressure is increasing at each higher levels. So it will give you all the necessary confirmations that the setup is ready and we can look for an opportunity. Same thing in Dhanuka, clean pivot point around here and volatile contraction structure. Even if the LHS and the RHS meets our criteria, the contraction is not clean and we should avoid it until it becomes a linear contraction structure. I hope up to this point everything is clear. Is it clear to everyone? Okay, so let us move on. Now same thing in precision wires. Same thing, LHS, RHS up to a criteria. Good contraction up to this point, but you can see that the contraction structure deteriorates after each candle. You can see the contraction structure getting deteriorated. So this tells us that even if the price gives you a good candle here, it will result in a volatile price structure and may ultimately take your stop loss, or it may take your stop loss and then move up. So when we see this kind of price structure, again we will wait for a breakout continuation contraction, and after that only we will look for an opportunity. Another example is Sanathan, clean pivot point, decent change of character from LHS to RHS, but after that breakout, expansion candle. Look at this, look at this, look at this. Let's say we did not see this, right? We were not seeing this, and we only saw up to this candle. Now normally whenever we see this kind of candle happening after such a volatile move, many people will enter saying that the supply pressure has gotten absorbed and the price is ready to move up. But what we saw in these previous candlestick patterns is that the volatility is maximum whenever the price reaches the higher levels. Look at this, the volatility is maximum whenever the price reaches these higher levels, and there is a high chance that the price may give you a fake breakout and trap you in this setup. Now let's say A bought here and took the SL and exited here. Same thing here, he will enter SL hit. Same thing here. We are not seeing this price structure. Many people would say first breakout happened, it took our SL. Second breakout happened, it took our SL. Now they will assume that they will say that all of the SL has been hit and it has gotten the necessary liquidity that it needed to go up. But again, after this breakout, which is this one, it resulted in a breakdown, and ultimately whoever entered in this breakout candle exited after taking a stop loss. So we should always wait for a good breakout, continuation, contraction, and then and only then we should look for an entry. And also the contraction structure should be a healthy one, like this one, where the lows are protected and the high are also protected, and the candlestick structure is not volatile, rather it should be clean. We should not get this kind of volatile price structure where the highs and lows are not being respected by the price. Even if the price gives you a breakout, good follow through, and you see this kind of contraction, you should normally skip this this stock until it gives you a linear move, good expansion candle, good contraction where the highs and lows are respected, and then and only then we will look for an opportunity. Now every up move should have the volume footprints, because the volumes are the lifeline of any price structure or in general the stock market. If there are no volumes in an up move like this, then that usually means that there is no significant demand pressure, and at any given moment it may give a breakdown or a volatile price action. So whenever the price starts moving from LHS to RHS, you should see volume footprints like this, and whenever the price is giving a breakout, you should see good volume towers like this one in R power. Same thing here, Camlin. Same thing you can see. During the RHS, volume footprints were already developing during the RHS side, but when it transitioned from LHS to RHS, you can see the volume footprints got much bigger, which clearly tells us that the strong hands were entering in these names. Same thing in Engineers India. Look at this. LHS side, decent volume footprints, but when it transitioned to RHS, you can see the volume footprints got higher and higher, and that ultimately resulted in a good breakout, good contraction, good follow through, good contraction, good breakout, and it may give another follow through, contraction, breakout, and follow through. Another example is Shankara. During the LHS, not a lot of volume footprints, but during this you can see, but it fizzled out again, the volumes subsided. But look at this, when it transitioned from LHS to RHS, you can see the volume footprints getting significantly higher from the LHS side to the RHS side. Now, another key point that any good setup should have is that the EMAs should be sloping up and supporting the price structure when it is going up. This may not always be the case, but the sloping of the EMAs should always be there when the price is moving up. That tells you that the price structure is gaining momentum and the strong hands are entering in that said structure. You can see that during the LHS side, the price was hovering in between the 10 EMA. This is the 10 EMA. The price was hovering in between the 10 EMA when it was forming the LHS side, but when it transitioned into the RHS side, look at this contraction near the 10 EMA, took support from it, bounced up. Contraction happening near the 10 EMA, bounced up. Contraction happening near the 10 EMA, bounced up, and so on. Same example in Camlin. RHS, when it was forming the RHS, the price was hovering in between the 10 EMA, but when it transitioned from LHS to the RHS, look at this contraction happening near the 10 EMA, contraction happening near the 10 EMA, and ultimately going up. Same thing in Engineers India. Look at this contraction, not the contraction, during the formation of the left hand side, the price was again hovering in between the 10 EMA, but when it transitioned from LHS to the RHS, you can see that the price was easily hovering above the 10 EMA and going up, contracting near the 10 EMA, going up, contracting near the 10 EMA, going up, contracting above the 10 EMA or near the 10 EMA, and again giving you a good breakout. Again, Shankara, during the LHS side, you can clearly see that the price was constantly hovering in between the 10 EMA without sustaining above it. But when it transitioned from LHS to the RHS, you can see that the price gave a breakout above the 10 EMA, sustained above it, contracted above it, and breakout, contracted above it and breakout, and it is currently contracting above it, and it may give you a breakout in the near future. And this concludes our session about what we should look for in a good setup and what are the characteristics of a winner. Now let us look at some setups that are showing similar signs of a winner or a good setup. Number one is Q power. Let me do this. Number one is Q power. You can clearly see that Q power has formed a base with a good pivot point. volatile breakout, but even if the selling pressure was high from this area, you can see that the lows are being protected, meaning this selling pressure, this low, if the price had to go down, it would have gone down below the 10 EMA and closed below it. But what it did was it gave you a breakout, good follow through, and look at this contraction, right? Decent contraction above the 10 EMA, contracting above the 10 EMA, and ultimately another breakout, but not a clean one. The market conditions were also volatile during this breakout candle, but again you can see breakout, follow through, contraction, clean contraction above the 10 EMA, and it may give you a good follow through in the coming sessions if it maintains this contraction structure. Another example is IIFL, where the price like this, right? You can clearly see that during this breakout it was volatile, but during this breakout the contraction was clean. Breakout, if it had to go down, meaning that the price, if the price had to go down from this level, right, from this level, if it had to go down, it would close below the 10 EMA and go down. But what it did was took support from the 10 EMA, bounced back up, and it is contracting where the levels are intact. So this may give you a good breakout and a follow through in the coming sessions. Again, another example is AU Bank. We have discussed about this setup, and you can clearly see why we are discussing about this setup, because good breakout, good contraction, breakout, contraction, breakout, contraction, and this may continue until the structure is intact, meaning that until and unless the higher highs and higher lows are intact, the price is above the 10 EMA, the breakout and contraction phases are clean, it may continue giving you good up moves. So this is another setup that we should look out for in the coming sessions. Another example is BEML, clean pivot point, right? Clean pivot point, breakout, contraction, breakout, contraction, clean up move. You can see the volumes, right? Volumes, it is above the 10 EMA. The price tried to go down, but it took all of the SLs that were active here. It took mine also, but you can see after it took the SL, I guess it took my SL here, but after it took all of the SLs that were active here, it closed above the 10 EMA. It gave a shakeout of the 10 EMA today and closed above it. Now if the price does something like this, contracts and gives you a breakout, then we can look for an opportunity in this setup, because it meets all of the necessary criteria that we like to see in a good setup, which is the clean change of character from left hand side to the right hand side, where the volumes are present, the price is above the 10 EMA, good breakouts and good follow through, good contraction, good breakout, good a decent contraction. And if the contraction structure tightens in the coming sessions, then we may get a low risk opportunity in this setup. Another example is Jubilant Ingrevia. We can clearly see that the LHS side is rather volatile, but there are clear signs that the strong hands are silently accumulating in this structure. We can also see that during the LHS side, the volumes were very dry with few pop-up volumes here, right? Meaning that the strong hands were silently accumulating, and that resulted in this big breakout candle. And after this breakout candle, like we discussed, that if the pullback is very small in nature, meaning that the range of the pullback is very small, that ultimately means that the selling pressure is getting weaker, and whoever bought here, let's say 10 people bought here, right? Let's say 10 people bought here, only 2 people are selling here, meaning that the supply pressure is getting weaker and more people are interested in accumulating the price around these levels. So if this low is protected and the price contracts and gives you a breakout, then we can look for an opportunity in this name. Same kind of price structure we saw in Subros today, and you know what it did today was a good upper circuit candle. Now this may not be the case in Jubilant, but if it gives you a good contraction, let's say for 2 days, and then gives you a breakout, then you may look for an entry here and you may book some quantities here or trail your SL around here and continue this setup until it gives you a change of character from higher highs to lower highs, from higher lows to lower lows. Another setup that we should look out for is Vogue Pharma. Same thing here, LHS transitioned into RHS. The volumes were dead, but we can see that the volume presence is increasing when the price is going up. Now we can see that the price gave a pullback and it made a low here. The low got broken, but it closed above the lows, which was from this candle right here. It closed near the lows, but again today it tried to go down, it again closed above it. Now what does this tell us is that the buying pressure is getting stronger and stronger, and the strong hands are accumulating the price at higher levels. Same concept here, 10 people have bought here, only 2 to 3 people have sold here, meaning that the strong hands are more eager to accumulate rather than sell the stock. So if it contracts for one more day, let's say, then we can look for a low risk entry. But if it, let us go to the lower time frame, if it gives you a breakout, then we can clearly see that this low is protected, so we can buy here, place our SL and let it do its thing. If it goes up, it goes up. If it goes down, we will take our SL and move on. Next example, next setup is Sera. Now this is rather a not so clean example, but it is fulfilling our criteria, where this is the LHS side on the higher time frame, which is weekly. We can clearly see it has contracted and consolidated above the 30 EMA and has given you a good breakout. The volumes are also decent here. And on daily time frame, we are clearly seeing that after this base formation, the volume have shot up significantly. The gap areas are being respected, the lows are being respected, the highs are being respected. Good contraction above the 10 EMA, good breakout, good contraction above the 10 EMA, and if it gives you a breakout, then we can look for an opportunity around this level. Now why did I say that this is not a good setup to track, but the structure is intact, but not a good setup to track? Because there is high volatile areas, meaning multiple pivot points if it gives you a breakout. But if we get a low risk entry, let's say, let us go to the lower time frame, we can clearly see here that the lows are being respected. So let's say it gives you a breakout candle right here, then we can look for an opportunity around here. Let's say we try to enter here, this will be a SL which is of 3%, so this is automatically a low risk entry, and if we get that low risk entry, we will enter here, place our SL here and let it do its thing. And the last one is AB REL. Same thing, a decent change of structure from LHS to the RHS. Volume footprints are also there. The price is sustaining above the 10 EMA. Good contraction happening. Let us go to the smaller time frame. Now what do I mean by this good contraction? Let us discuss. This is your pivot point. Lots of volatility, selling pressure, and ultimately went down. And this is the result of the Friday session, where majority of the stocks were down. But look at this, the lows are protected, lows are protected, lows are protected. It is inched above the 10 EMA, sustaining over it, lows are protected, lows protected. So if the price has to go up, it will do something like this. Now this is the range that I am most interested in, because let me delete this first. This is the range I am most interested in, because this is the area from where the selling started. So this is our LHS side on the smaller time frame, and this is our RHS side. The volumes are also not present, so I am expecting some kind of volume activity if it gives a breakout. So this is our LHS side from where the selling started, and this is our RHS side. Now on the higher time frame, this is your breakout candle and this is the low. This low is important because this is the candle which gave you a breakout of the structure where this kind of volatility was present, and it is currently trying to sustain over it. So in tomorrow's session or in the upcoming sessions, if it contracts here with good volumes and gives you a breakout, then we can look for an entry around here. You can clearly see the SL is very small, 1.16%, or even if we drag it down to this area, it comes up to 2% maximum. So this automatically becomes our low risk entry. This automatically becomes our low risk entry. So if we get an opportunity inside that range, only inside that range, if it gaps up or gaps down, the structure will lose its originality and we have to analyze it all over again. So if it opens inside this range or slightly above the range and contracts in a very small range, then we can look for an opportunity. If it gaps up, let's say 3 to 4%, then we will automatically discard this from our watch list. So this is the actionable watch list for tomorrow. I will share this with you guys, and these are also the setups that you can study today. I will share all of these names today with you in our group, and this concludes our session. So if there are any questions, you can ask now. Are there any questions? Can I get a yes or no? Pivot point means. Divya, were you present in yesterday's class? Okay, so we already recorded the session that we conducted yesterday, and I will share that video with you, so you can go through that video lecture and you will understand what a pivot point means. And even if you go through that lecture and you do not understand, then you can contact me personally over Telegram and we will discuss about this there. Any more questions from anyone? You guys have to ask me questions, because without asking questions, your doubts will not get cleared, and ultimately this will give you FOMO and you will not get the clarity that you need when entering or exiting a setup. So if you have any questions, then please ask, and if you do not have any questions, then you can say no, or if you have any questions, you can say yes. Okay, Divya asked that can we enter fact, right? Fact is also in my watch list that you can see. Let us first analyze it on daily time frame. Fact, right? LHS side clean transition from LHS to the RHS. First criteria is intact. Let us go on the weekly time frame above the 30 EMA. Another criteria intact. Good breakout. Volatile contraction, meaning that up to this point, right? Up to this point, this was good because it was maintaining the highs and lows, but after it did something like this, where the highs were not being respected. The lows were also starting to get neglected, but it pushed the price higher in the two sessions right here, which means that the buyers were active around these levels, right? So we can say that the buyers are active around these areas, and if this low is intact, then we can look for an opportunity in the coming sessions. Now what should the price do here is, first of all, we have to look at these volatile candles, right? These volatile candles. So what should the price do is, first of all, contract near this level. This will tell us that the buying pressure that was present here is pushing the price high, and even if the selling pressure is high from here, the strong hands are accumulating the price at the higher levels, which will build up our conviction that the price structure shifted from a volatile one to a linear one. So the first criteria is that the price should reach this level, contract for even a slight bit of time, and first of all give a breakout. After the breakout candle, we will look for a contraction. Now the breakout candle should not be around 10%, right? If the price gives a breakout candle of 10%, then the setup is already out of our hands. Let's say 2%, right? Let's say the breakout candle is of 4.2% from today's closing. If it closes, if it gives a breakout up to this area, contracts here in a very small range without much volatility, where the highs and lows are respected, and then gives a breakout, then we should look for an opportunity in this area if the setup is of low risk. If the risk is very high, meaning that the breakout candle is a very big one, let's say 7 to 8%, and if the risk is high, let's say 4 to 5%, then we would normally skip this setup. I hope you got your answer, Divya. Thamu asks, explain about supply observing or absorption. Thamu? What do you mean by this question? Can you provide more details, or with an example of a chart? So let us move on to the next question. OCCL Ltd IPO base looks good, right? OCCL Ltd, right? Look at this 5% circuit structure. This automatically gets out from our watch list, because first of all the liquidity will be low, meaning that the volumes will not be there, and this price can also get manipulated. So we would not like to get stuck in this kind of structures until the price band is of minimum 10% or 20%, which is to our liking. So Thamo, can you explain your question by providing a little more detail? Okay, Thamo. So anyone has any more question for this session? Can I get a yes or no from everybody? Or is everything clear? Okay, so this concludes our session for today.